welcome back. Today we are hosting Eva Warigia. She is an executive director at the East Africa Venture Capital Association. Eva, welcome to the show.
Thank you.
I hear you have everything that we need to know with regards to making money in the private equity space.
I hope I can help.
I'm sure you
yeah, I'm here to just give insights.
Give insights.
Yes,
okay,
and
fantastic.
hopefully do good for the market.
Okay, fantastic. You have a very excellent reports that are coming out from your partnerships with different stakeholders in the market. Starting off with the Alpha Investment Report, really just give us an overview.
Yeah.
What's happening when you're looking at the returns across the different asset classes and in the different markets? What asset class is doing very well?
Good. So I'll give you a bit of a background about the Alpha Investors Report. We did it because we felt the market had focused for the longest time on the traditional assets.
Okay.
It's the public equities and the bonds market and maybe cash deposits to some extent. And for alternative assets, which are sort of the new space for value creation for investors, we felt that that was not being as much addressed as a space for growth. And EAVCA partnered with I&M Babbage Capital to do this Alpha report. Now, this report tracks 5 asset classes that are available across the region to institutional investors and even private investors. Okay. And based on that report, we started by looking at 10-year cycles, just because at least for some of the alternatives mentioned there, they have a 10-year investment period.
All right.
And then we went into 5-year and then year-on-year.
Okay.
Right. So the report captures public equities. It looks at fixed income, money market, real estate, and private equity.
Wow.
Yes, it's a lot, and you can get it on the EAVCA website. So from that report, what was interesting is contrary to what we hear a lot about East Africa, we're not doing that bad.
Oh, is it?
Yes.
We're
not doing that bad. I think in the period 10 years, the investment period of 10 years, East Africa has about 13% growth.
Wow.
In public equities.
In public equities, okay.
And obviously fixed deposits are doing, fixed treasury bills and bonds are doing better, and the money markets as well. But when you look at the 5-year period, which is the immediate last 5 years, that's when we start getting some issues with our markets. And I think these are well known, which now begs the question, if the market, the public obvious markets are performing as they are, yes, where else can one get alpha? Okay. And so the report looks at real estate and PE as the alternative assets that are available in this market. We know that our regulators make a provision for these 2 assets. And for private equity, at least we've tracked exits performance. We didn't track fund performance, we tracked exits, which is how private equity funds earn their money when they invest into businesses and turn them around. Okay. And those were quite attractive. Over the last 5 years, we got an average of 13 to 17% IRR on exits. Oh wow! And that's a very good return. Yes. Okay. But I have to say, this is on portfolio exits. This is not a fund exit. Okay. And this is different from fund exit, because fund exits are after you've done number of portfolio exits and then you accumulate. Okay. So portfolio is if I bought Java at this price and I exited at this price, this is the return I've been making on average per year. Precisely. Okay. Precisely. Okay. So but then maybe before we just get into the different asset classes, so as you're looking broadly at the region and the different asset classes, for one, what's the best performing country with regards to returns all round in East Africa? I can speak to private equity, if that's okay. Yes, please. I think to date we found that private equity in Kenya tends to outperform the region. So Kenya is still the place that you need to invest in? Yes, Kenya is still the place that you would get the sizable returns, and it's quite for obvious reasons. Okay. It has a bit of a diverse economy. The talent is there, and there's a lot more businesses that are available for acquisition. For an investor. And it's easier. It's easier because it's not as easy to actually get into Tanzania, and movement of capital as well. It's not so bad. Is it? Okay. I feel like sometimes like I have to defend Tanzania. Okay, fair enough. Please do. And there's actually quite the buyer's market right now in Tanzania. Okay. So you can get some solid assets in Tanzania at the moment, especially in traditional sectors. Okay. But I think for Kenya, if you're looking especially to leapfrog a business using technology, then it has a sort of better advantage to the region. So if you're in technology, Tanzania is slightly better because of the interoperability? No, sorry, I meant Kenya. Kenya is slightly better, okay. But Tanzania, it's an agri economy. East Africa is an agri dependent economy, but Tanzania has agri, it has manufacturing, and then there's the obvious oil and gas extractives, areas that also present quite the number of M&A opportunities. We also have to note that Tanzania is connected to SADC, the SADC region, so that gives a new dimension to growth and expansion opportunities. You can venture into the south, where you feel East Africa is a bit more competitive for you, and that's a divergent, interesting point.
That's a very interesting point about Tanzania. But now let me bring you back to the report. We were able to pick up some very interesting charts. Maybe our graphics team can put up the first chart on report number 1. So I was just comparing and picking the key things, because you're saying you've looked at a 10-year horizon, which I thought was a fantastic element of time series data. And I saw Safaricom there, the holding period return 538% in 10 years. I get very excited by such numbers. And then after that, there was Equity Group at 98% of the last 10-year period, KCB 67, and East African Breweries at 21%. How does this compare overall with regards to the private equity? Have you seen someone who's actually been able to get a return similar to Safaricom in the PE space?
The jury is still out there.
Okay, the jury is still out there.
It's also because private equity is just short of 10 years.
Oh yes, you're actually right.
So if you think about it, it entered the market just about 10 years ago, which means we are only now starting to see the initial funds getting the returns from their exits. So yeah, the jury is still out there.
The jury is still out there. And maybe also Safaricom is an outlier, so maybe we should be looking at the other companies at this point.
Yes, there's that. But Safaricom has done very well for themselves, and I think it's the company to watch. Okay,
fantastic. So I'll quickly take us through. There's another chart that we put up on the money markets, just showing the 10-year period and the 5-year period return across the region. I think our team can put that up. There we have it. So again, we were just seeing the average yield for the last 10 years in Kenya, 8.4%, Uganda 11.5%, and Rwanda 7.2%. Maybe you can give us an overview of the investment climate in Uganda. What's good there? What's not good there?
I think that was for the public market.
Yes, it was. This was the money markets actually.
Oh, okay.
Yes.
So I think Uganda is one of those markets we consider relatively stable.
Yes.
We rarely get those sharp economic shocks
fair enough.
In other markets. And because of that, it's easy to project the earnings there. Unfortunately, the options may not be as many as you would get in Kenya.
And that's with regards to the private equity?
Cuts across the assets. So traditional sectors as agriculture and financial services tend to dominate that market as a play for private capital, at least. Interestingly, we're getting more tech ventures for investment there in Uganda, especially as relates to lending, mobile lending.
So it's the same way that we're saturated in Kenya. Is it the same players in Kenya who are going there?
I no. That market also has its own budding entrepreneur community that appreciated and understood the needs of Uganda, and they're now building for Uganda. And so venture capital, that which plays in the early stage space, is starting to veer into Uganda and get quite good deals there. And then we obviously still have the traditional sectors, healthcare. I think there was a few deals in pharmaceuticals last year. At least for private equity, we got 2 deals from Uganda. One was an exit through the markets by, I think, Carlyle.
Yes,
and then Carlyle. The second one was a PE to PE transaction. Africa Invest exited another pharmaceutical deal. So yeah, it's quite a vibrant market.
It's vibrant.
Yeah, I think they don't shout as much as they should, but it's one of the markets that provides good.
Eva, hold that. I like how you're bringing a picture. I mean, it feels like it pays to be big, and Kenya is getting the lion's share. But let's take a quick break. The market has just closed. Look out for the closing bell. Don't go anywhere. We will be back shortly.